presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow Industrials down 81, NASDAQ off 23, S&P's down 7.5. Gold contract up $19.30, traded at $1,150 an ounce. Silver up 33 cents at $15.12 an ounce. Platinum up 21 at $9.53 an ounce. You get copper flat at $2.30 a pound. Light sweet crude up 57 cents, trading at $45.05 a barrel. Bonds. The 10-year up 6 ticks, 128.05, 30 up 1.5 ticks, 156.25. Both pushing higher, folks, with price spread and volume. King dollar down 61.6, 96.14. King dollar couldn't handle its swing point once again. We had 4 separate swings that it couldn't even get to. King dollar is going to be making its way back down to the swing point from August 25th. That's the 95 to 92 area. Euro up 32 at 112, and the yen trading at 119.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. You got a market out here, folks. I'll tell you, man, it's a trip. You talk about not only a trading market, but bounces that come in that are pretty extraordinary. Inside the S&P, the SPY right now, we're trading at 192.85. You've broken the 192.56 area. We'll see whether we get the juice in it. We're at 117 right now. Anything over 153 is an ABC structure down into the 184 area. NDX 100, same setup in the NDX 100. NDX 100 is going south. It actually got positive for a few minutes, and that's a typical bear market run. The number you're going to be looking at in the QQQ is 103.13. We're at 103.63 right now. 47 million. It doesn't look like the Qs are going to get the volume characteristic for an ABC structure on the way down. Gold contract. What do we have with gold? You have the wide price spread. You have the accelerated volume. You have the ABC structure on the way up. GC. So here you go inside. Come on, baby. Gold is trading at 11.50 right now. You've done 193,000 contracts. You took out the swing point from September 18th with volume, wide price spread. That's going to send it up to the 11.69 area. What's wide open now, folks, is going all the way up to the 12.34 area, which is the highs that were generated out here on May 18th. What you had, when we came off the bottom in July, we broke the downtrend. That downtrend, the downtrend I'm talking about is the trend from May 18th. Bottom line, now you get the verification of it. You back down with lighter volume after we made that high of 11.69. You back down to 10.97, did it with lighter volume, went against strength of the 11th and 12th of August. Go topside again with volume, back down with lighter volume, take this baby out with volume. Bottom line, gold, metals want higher price. Bonds. Now, see, the bond market, folks, continues to give the most consistent information out in the marketplace. And the bond market, once again, and it did it today, and this is what's really cool. I mean, it's just pretty amazing, actually. So the 10-year runs to 128.15 today. We do that with 116 1.6 million contracts. Bottom line, folks, you're into the bar of the 24th, which is the highs, and you're running into that bar with volume. This baby is going to go up into this bar. I expect what you're going to see is that actually, I expect we're going to see this tomorrow. The markets are deviant beyond belief. There's no two ways about that. What we just went through, so check this out, folks. If you're not in front of a screen, it's really cool what just happened. What we had is this. Okay, if we look at the NQs, what you're going to see is that the NQs, you know, if you listen to my morning show, we hit 4185 on the lows. The projection was 4172. Bottom line, it got right where it should have got. Then you had a counter trend bounce. The counter trend bounce, which is just crazy, man, turned around, and what it just did is it filled the gap from yesterday. That's all it did. And, you know, you're going to see as we come into this close again today, you're going to see some problems coming into the close again today. Why? Well, all we have to do is go overseas first. We were talking about the Nikkei the last couple days. Nikkei had been closed. Nikkei blew its bottom out with juice, okay? Bottom line, Nikkei took apart the 25th. That's 17,747. Nikkei goes down last night, 498 points. We're trading at 17,571. That's going to go lower. The DAX, if we go right from there to go to the DAX in Germany closed at its lows. The DAX got down to a price point of 9,362. As we come into that level, the low is 9,338. What I expect you're going to see out here tomorrow, it's going to go after that level and more than likely blow it out. Now, we had intraday. So inside the DAX today, it was BMW that was the leader in the DAX on the way down. And that BMW, what you had is that a German magazine had come out and said that BMW also was basically had a problem with their admissions, okay? Well, what happened intraday where this bounce came from is that Auto Build, which is, they clarified an earlier BMW report in an email statement saying they had no indication of exhaust admission. Well, guess what? It's too late, folks. It really doesn't matter because you blew out the lows and you blew them out with volume in BMW. And if you take a look at actually what's kind of interesting, well, it's real interesting here. I suspect all these car companies are going to be under pressure because Daimler Chrysler, which is not involved in it yet, okay, bottom line also blew its lows out with volume. The low, we're talking about a 65.40. It had 13.8 million shares. We did 13.8 million today. Well, yeah, same thing. 13.8 million. Blew it out with 13.8 million. You get an ABC structure on the way down. The larger problem maybe for these car companies is that diesel is going to be dead. And there's been a lot of diesels that are sold. I was looking at a chart of the amount of diesels that have been sold, and it's quite extensive. I mean, big time, too, not in a small amount. So I suspect that's what we have happening. We're going to take a look at inside the Dow Industrials, the strength versus the weakness. What you have inside the Dow, the leader on the way down is Caterpillar. We'll talk about that. That got blown away. That's down 437. United Health is down 232. Goldman Sachs is down 319, and Boeing is down 226. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow's down 99. Nasdaq's up 25. S&Ps are down 10. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are off 86. You get the Nasdaq off 19. S&Ps are down 7.5. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. Don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. You can get it right on your cell phone at tfnn.mobi. That gives you the audio. You want to get the video, the Tiger TV, just go to tfnn.com on your phone. Right-hand side, you're going to see the box. Hit it. Our servers are going to know exactly what type of device you're on. You'll get Tiger TV delivered to your phone. Now, Andy also has a great newsletter. It's called the Technomento Commodity Report. The way you can get it, go to TFNN. Across the top, you're going to see newsletters. Hit newsletters, hit trading newsletters. You see the Technomento Commodity Report. You can test drive it 1 month absolutely free. Andy Heck, what's going on?
Hiya, Tom. How are you?
I guess we're going to eat some meat.
Oh man, that's some volatile market. That cattle is crazy. But before we get into that, I wanted to bring something up. I know you're a big Boston fan.
Yeah.
But yesterday, you know, as a New Yorker, we lost one of our real prizes. We lost Yogi Berra.
Right.
And you know, when I wrote my book, How to Make Money with Commodities, back a couple of years ago.
Okay. I
actually started each chapter with a quote from Yogi.
How cool was that?
Because his quotes were the best. You know, I wrote one down here for you today.
Okay.
One of the funniest ones that I really liked. I mean, it has nothing to do with markets or anything.
No.
But he once said, "I can't eat 6 slices of pizza. Can you cut that pie into 4?"
I love it.
He was the best.
I wonder, I mean, is that how he always was? I guess that's how he always was, right?
I think that's just how these things would come out. I saw like an interview with his kids once, and they said that they'd sit at the dinner table, and you know, he would say something, and they say, "Oh, there's another one."
I love it.
It's just the way it came out.
And folks, he was an amazing baseball player. You know, Andy, I was so lucky because I got to see him so much because when I was a kid, my father worked for a parking lot over Fenway Park. So I was always in Fenway Park. I always lived in Fenway Park. And that's when folks, there was only like 2,000 or 3,000 people in Fenway Park, 4,000 at the most, every day. I mean, it's like crazy. But,
he was an amazing guy. And he was, you know, just a good person as well.
Yeah. That's so
Absolutely.
cool.
So anyway, so cattle, man, I actually have that cattle chart up because that was the first thing I was going to talk about after Yogi. And man, that is one wild market today.
It is, and it's interesting. In the morning, folks, I'm Amos Larry Pesavento, 9 o'clock. He's had Rich Anderson on a few times, and they were setting this cattle deal up, and unfortunately, they got stopped out because it went to limit down yesterday, and the bottom line this morning. It was within 1/2 penny of limit down again.
Right.
But that's a nice setup. Let's talk about it.
It's a nice setup. I mean, we spiked down on the December contract here, which is now the active month. We got down to 131.70 on the
and 131.25 was the limit for today, folks.
Right, on the nearby, exactly, and on the nearby contract, we also actually got down, which is kind of cash now. We got down to 128.725 with the lowest. We broke all the support and everything. But as often happens when we have these spike lows on big volume, it just found buyers there and it came storming back. I mean, we're basically 5 cents above the lows, but we're very volatile conditions here.
Well, I know that you like, the options on the futures, and that's where that would have been a really sweet trade, man.
Oh, absolutely. And what I've really liked lately, and I've been talking about on my show, is I really like the spread long pork, short beef.
Okay.
And that thing, that thing was up at around 2.2 pounds of pork for each pound of beef.
Yeah.
And this morning it went down to 1.8, where I kind of actually took my trades off. So I think that this is a great trading sardine in this market. If you don't want to be, totally exposed to meats, trading one against the other. As I always say, intercommodity spreads, these substitution spreads offer some real incredible value at times.
Yeah, they do. And it's less risk.
Absolutely.
Yeah,
you do cut your risk down, and hey, you're taking advantage of market divergence, which in wild markets that are a trader's paradise, we see divergence all over the place.
Right.
Now, there's two other commodities today that have done some interesting things. I mean, there's been a lot of interesting things. Coffee made a bullish key reversal on the daily chart.
Okay.
So we went about 20 ticks below yesterday's lows, and we closed above those highs. So that's interesting. And cotton did the same thing, made a new low today and closed above. It closed close to yesterday's highs. It did go above, but it came back down a little bit. But these are commodities worthwhile watching here. Of course, gold had a very strong day. We breached above the 1141 level. Looks like gold wants to go back and test that 1170, which we got up to on August 24th, see if it can get above there. But those divergences continue to widen, Tom. We're at 75.6 to 1 on the silver gold ratio, and we're at $197 discount, platinum under gold here, which is, basically within a couple of bucks of all-time lows.
Yeah, no, I can see that. And I've been putting some thought into the aspect of what you're talking about, saying buying a 50-ounce contract and taking delivery on it, because that gets intriguing.
Absolutely. I love that one. I mean, right now, we're talking about $47,000 or something,
right,
roughly,
right,
give or take, with no premium. Hey, you won't get a premium when you sell it, but at least you're buying and selling at the market price, right?
Yeah. No, totally. Yeah.
Copper.
So let me ask you something. When you sell back into it, right? So let's say you buy it, you make sure that you can take delivery, and then when you're selling it, would I just sell it short?
You sell it short
at that price and then just know I'm going to deliver it, right?
You deliver it back on warrant. You can even keep the warrant. You don't have to take the costs of taking the metal off warrant. You could just hold that piece of paper and deliver that piece of paper back. But anytime you want, you can cash that in. That's the beauty.
That's beautiful, man.
Yeah. It's a good way to play platinum right now. I mean, I really kind of like that play.
Totally.
It's just,
folks,
you can't even get your hands on the coins.
No, folks, you can't. A coin, you just can't do it. $1,300, maybe $1,200, and it's trading at $9.53. Big deal. I mean, it's insane.
Exactly.
But it's perfect.
It is insane.
It's perfect.
It's a perfect setup, and we should monitor. So let's do the following. We should now monitor the cash platinum price on the New York Mercantile Exchange, which is the September contract.
Yeah.
And if we start seeing that spike up, it'll mean a lot of people are starting to do that.
Oh, it makes sense, man. It's a no-brainer. It's a no-brainer. And what they're thinking, folks, because I was looking last night in South Africa. And, they're looking that, that we're at a peak supply right now. And there's not a lot, by the way, either, folks, okay? But that's what, that's what it's looking at. The downdraft on platinum, really a blowout downdraft of down 34, has to do with the amount of Volkswagen.
Well, yeah, I mean, it has to do with a lot of things. Certainly, I mean, lower automobile sales all over the world.
But there's higher automobile sales.
Right.
When the diesel scandal come out, they use more in diesel engines. That's the deal. Yeah.
Exactly. So we'll see. We'll see what happens. Meanwhile, we have volatility. Volatility reigns supreme here. The one thing that's not moving yet, that I'm keeping my eyes closely on here. Two things, actually.
Okay.
Copper. We could talk about copper and lump when we get back.
Awesome.
If you want.
You just stay right there, folks. Andy Heck, Tom O'Brien, we want to hear from you. Our phone number is 877-927-6648. Dow Industrials right now down 64. Nasdaq's off 14. S&Ps are down 5.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get Big Blue trading up $1. You get Walmart up 10 cents. JP Morgan's down 36. You get Coke up 32. Caterpillar is getting smoked. That's down 450. We're talking with our man, Mr. Andy Hecht, and we are talking commodities.
So we were going to talk a little bit about copper here, which has really been very quiet after it came down from almost $2.50 a pound to $2.30. We got down to $2.27.30 today, just about 7 cents above the recent lows, and kind of was sitting here at $2.30. But lumber is also lumbering. Let's take a look at a chart on lumber, if I can get that up there for you. The lumber price actually made new lows. And we're down, let's see, we got down to $215.60 per 1,000-foot board. We closed today at $216.90. There's the chart. And as you can see, that's really weak. Now, crude oil's picking up a little bit. It's up 43 cents. It seems to be liking consolidation around this $45 per barrel level. But, if you look at these three commodities, hey, these are the best indicators of what's going on in the global economy. And everything else is just moving around a lot because no one's quite sure what's happening out there.
Yeah. So
volatility, baby.
I have the, it's interesting. So this lumber contract, so we're at 218. Your lows are 137. The last peak was in March of 2013. See, that's interesting. So this is definitely all about China because we know we've been building like crazy in the United States. Everything's basically behind because it's so busy.
Right.
That's interesting.
Well, the world. Let me show you another chart that's all about China here. Let me put that up here. DA6 is the Aussie dollar. That is all about China. That's taking a second to get up there. If you can put up a chart there.
Yeah,
we're right now at the 70-cent level.
Right.
And, we're down pretty, hard from where we were. We were over $1. We were over parity for a little while there.
Oh, yeah, it was $1.10 August of 2011, right.
We look at the Aussie dollar, the Canadian dollar, the Brazilian real. These are all countries that basically are the Costco's for China.
Yes.
They're shipping all the commodities in, and they're really, really suffering here. So, what my view, I can't get bullish on commodities right now. I just can't. You could get bullish for the day, for the week. You could think that there's going to be a nice bounce here or whatever. They get oversold. They come back like cattle today. They absolutely destroyed it, but it came roaring back. But the general trend is still a trend of lower highs and lower lows since 2011. And considering where prices were pre, the beginning of the rally,
sure.
There is some downside room. So what I think we have to do is we have to trade. We can't be long-term investors in these markets. We have to take profits when they're available. We have to be cautious with stops. And, we have to be willing to trade from the short side in terms of a lot of these things. So the one last one that I wanted to cover with you today was natural gas, because natural gas had a big injection today, 106 BCF, which for this time of the year is a pretty big number. We haven't had an injection of over 100 BCF in a while now. They've been around 50, 70, something that kind of area.
Yeah.
106, big injection.
And they flushed that baby down and out and then brought it up.
They flushed it down, and now it's up on the day. That's the point. Trading, baby. These are trading markets. These are markets for, not to get, they're fear-based markets. Markets are moving tremendously on fear, and then, people digest the move, and they say, okay, and they go the other way. So, and we've seen big moves in open interest as well in a lot of commodities, which means that money is shifting around a lot here.
Yeah.
The only thing that seems to be in a pretty big downtrend here, to me, is equity prices, and that is just a response to the global economic situation.
Yeah, well, I'm going to make the argument the only thing in an uptrend in the commodities is gold.
Well, I don't think gold. We're going to disagree. Since 2011, gold has done nothing but make lower highs, lower lows. I'll agree with you if I see gold above 1,200. But until that happens, that trend is that longer term trend is very firmly in place. And the divergences are telling me that, hey, the next rally, if we get up to 1170 or something, I want to go short.
Well,
it's a tight stop.
I'll sell you all you want, man.
Okay, good. You could sell it to me now. You could. What do you mean you'll sell me all I want? I thought you're a buyer.
Well, you have to basically go short. You're going to need something to go short, aren't you?
I'll borrow it. That's the game in gold. You borrow it.
No doubt.
You borrow or you go short futures. No, but up at 1170 to 1200, I think that's the range to go short gold. I just think, look, the macro picture here from 30,000 feet is that since 2011, commodity markets have been in a downtrend. It's going to take a very large event or something to happen across the board in all these markets to change that downtrend. Having said that, gold is the strongest commodity out there, but I wouldn't call it an uptrend.
Yeah. What I like right now is that this is the first time that gold has gone counter to the markets. In 2006 and 7, we went from 1,033 down to 666 in a heartbeat. So, to me, it has the price spread, it has the volume. It's taken, the equities are taking every swing point out today with volume. So you get buyers, and I like that.
I hear what you're saying.
I like that divergence. The thing
that I think is that we haven't had the real flush in the equity markets yet, and I want to see what gold does when these things really flush, because I think that's coming. I think
that's a
we
good
haven't
point.
seen
I'm with you.
The 2008 earthquake. I think that's coming, by the way.
Yeah, no, that's a great point. There's no doubt.
So we'll see how it reacts. Hey, listen, if gold goes above 1,200 at that point, I'll agree with you 100%. But the jury is still out on that. We had a taste of it on August 24th, but it snapped back so quickly. We need real fear in these markets, real deflationary fear. When we get that, we'll see what happens across all these things.
Yeah,
I have a feeling that day, that'll be the day copper goes to $2.
Yeah, it's gonna be wild watching this thing shake out.
It will be wild, that's for sure.
Now, I was listening to your show the other night. You're actually thinking though that we're in we got another 2 or 3 years in a bear market in commodities.
I do. I think that, China's like if the U.S. economy and Chinese economy are ocean liners, these things are giant ocean liners, and to turn them,
right.
It takes, it takes a long time to turn them. You can throw all kinds of stimulus, all kinds of things, and eventually, Tom, the response for all this easy money and all this stuff is a bull market in commodities and inflation. There's no question about it.
I know.
However,
it's just a matter of when, right? I know.
When. And I think we're going to have to. I think we have to get really into a really rough deflationary period before that, that becomes the response.
Well, what's intriguing?
Today they cut interest rates in 2 more countries, in Taiwan and in Norway again today.
Oh, the guys in Norway, folks, they made so much money in Norway today, because Norway was just like, just like the Swiss. They're saying, no, we're not going to do it, and we're not going to do it, and guess what, man? They did it.
Of course. I love the new central banker trick.
Unbelievable, man. Yeah, totally, man. Well, listen, man, thank you so much. We love all the education, Andy, and we look forward to the show at 5 o'clock.
Take care, Tom.
Thanks, man. Have a great one. Have a safe one. And 15th through the 16th, folks. 14th through the 16th, actually. We're going to be out in Vegas. Come join us at the Paris Hotel at the Traders Expo. Andy's going to be there. We're coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 58. Nasdaq's off 14. S&Ps are down 4. Now, inside the Dow Industrials, this is we have strength versus weakness. The strength is Procter & Gamble. That's up $1.28. Chevron is up 96 cents. You have Coca-Cola up 40 cents. And ExxonMobil is up 66. The weakness, Caterpillar. Took apart its swing load. It's down 440 at 65.81. United Health is down $2. Boeing is down 180, and you've got Goldman Sachs down $2.37. Inside the NDX 100, strength versus the weakness. So you have the strength is Netflix. That is up 475 at 102.879. Micron Tech is next. That's up 56 cents at $15.36. JD.com, that's a Chinese stock, up 89 cents. Dead Cat Bounce, 27.27. And Staples is up 32 cents. That's 12.72. Taken away from it on the way down, you got Charter Communications down 6.18. You have, let's see, BioMylan down 3.81. Gilead is down 2.96. And you get Celgene down 3.03. If we do go over and we take a look at the IBB, what you're going to see, folks, is the IBB is going to continue to keep pressure on the composite. The composite, by the way, folks, is doing pretty good today in relationship of the rest of the indices. So, well, actually, they're all the same. They're hardly down compared to how Europe was, or compared to where they were down this morning. We were down about 1.4% across the board. Right now, the Dow's down 3/8 of 1%. You get the S&P's off 1/10, and the Nasdaq's down 3/10. IBB, though, check it out, because this is going to get interesting coming out here tomorrow morning. IBB's down 576. Can't handle it. You get 3.7 million shares. Now, the swing point had 4.4, so you're not going to get the volume out of it as it's breaking the swing. But what you do have is that you're coming into a Friday, and it's going to be one of these deals as to who is going to hold the equities over the weekend. That's buy equities over the weekend. You do have Janet Yellen that's going to be talking at UMass at 5 o'clock, and I suspect that some of the bulls think that she's going to save the market. We'll see where that shakes out. When we go overseas, bottom line, let's go to the UK next. We take a look at the UK. What we have inside the UK is this. The UK closed at its lows, down $70. You're at 59.61. The low of last night was the prior night was 59.33. I suspect she's going to try to get after the low of August 24th, which is the 5768. The biggest number no doubt, is the DAX. The DAX, you talk about fast, furious, all of the above, had it all. The Nikkei blew out its lows with volume. If we go take a look at the XAU and the HUI, they both have juice to the upside out here. And the XAU right now up $3 at 47 bucks. That's going to run into the 49.77. I expect you're going to see that tomorrow. If we take a look at the HUI, same setup. We're up $7. We're at 112. That's going to run into the 118.47. If we take a look at a few of the individual equities, what you're going to see, I suspect we're going to have ABC structures on the way up. The reason being is that an Eagle, bottom line, blowing away at swing point, 25.49, 5.7 million shares versus 4.6. Where's that going? That's going up to 27.91. I expect what you're actually going to see, though, you're going to see 34 bucks. The highs that were generated, folks, in May, that's where we're going inside this market. What the gold equities have also done is that they've been basing out since July 24th. When you put this back on a longer-term basis, what you're going to see is that they did everything that they were set up to do, and that was testing the lows of 2008. They tested those lows. They rejected them with dramatically lighter volume. And I can make the case that we've been basing out here since June of 2013. So we've been basing out at the lows for a couple years. You know, the real key is going to be once we get up into the July highs, is the market going to be able to make it up to the highs that were generated out here in November of 2012? There's no doubt there's work to be done. But when you look at the marketplace, what's really cool, if you're in that market, is that gold and the equities are going counter to the market. And in fact, inside the market, they're about the only thing that are going up with some real juice. In fact, yeah, I'll show you. Where do you see this? This is pretty intense, man. And this is not the first time that this has happened. Out of the best performing stocks out here today, you get Horizons, which is a gold stock, Ego, Franco, Nevada, Gold Corp, Silver, Wheaton, Barrick, Magenta. They're all right at the very top, and they're all up 7, 8, 9, 10%. On the way down, look at that Linden Tree, man. That's down big. What's happened to that? TREE. That's getting taken apart. Let's go see what TREE is doing. Linden Tree. That's down 13%. Oh, that already came off the highs with volume. You're down 13 bucks. This has already come off the highs with volume. The first high was 139. Goes down with 1.16 million shares. Does a counter trend bounce with 200,000 shares and then blows apart again today. If you take a look at Caterpillar, what you have with Caterpillar is this. Caterpillar, monster ABC structure on the way down, blowing out its lows with volume. Caterpillar, folks, is setting up to go. We're at 65 bucks. The next stop on Caterpillar is down to like 44, so big problems. Let's go to Jim in Wyoming. Hey, Jim, what's going on?
Not much. I'm looking for STKL.
STKL. Let's see what we have here. So they own and operate a natural and organic food markets. The company sources, processes. Okay. Also distributes recycled environment for industrial materials. That's weird. So they own and operate business in the natural food markets, and then they're in the industrial material market. What a trip that is, huh? That's pretty interesting. Yeah. Mm-hmm. Okay, so they sell plenty of product. They sell $1 billion. This stock has been on a one-way trip from $14 to $6. Okay, so let's see where we're going. Okay, so, well, what I do is this. It looks like this thing, you know, the lows of 2008 are 524. So right now you're at 624. Just let it get down to there for sure, man. You know, it's possible that this thing actually goes down to 229.
Whoa.
Yeah, I know. It's pretty wild, man. It's kind of a strange business mix, huh?
Yeah, commodities.
Oh, is that what it is? Okay, so they own and operate businesses, natural organic markets. The company distribute natural organic food. They also recycle environmental friendly industrial materials.
Yeah, they just had a secondary offering. I don't know if that means they're in debt.
Yeah, it's not good. That's the bottom line, man. I see what they're doing, and they're going to sell $300 million 7-year notes, healthy food, unhealthy profits. Yeah. Don't touch it, man. Don't touch it. Cooking, brother. Have a great one, man. Have a safe one. Let's see. That's a beautiful thing. We got 10 more minutes. I like it. Dow right now, down 98. NASDAQ off 24. S&P's down 9.5. You stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, don't forget, our program starts at 8 o'clock in the morning Eastern Standard Time. You can get it all right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com on your cell. On the right-hand side, you'll see a little box with the devices in it. That will get you Tiger TV. You can set the charts as well as the, of course, the video as well as the audio. Honeywell's down $1 out here. You got 3M down 11 cents. Procter & Gamble's up $1.19. That's a dead cat bouncing the way up. You have Coke up 35. If we take a look at the Deere, Caterpillar and Deere absolutely got toasted and roasted out here today. Deere also took out its swing point, took it out with juice big time. Deere is trading at a price point right now of 75.71. And when you take a look at these, what you're going to see, Deere was a classic, man, like triple top. Deere is going after the October 2011 area, which is $59. What has happened in the marketplace, folks, is this, is that when we were looking at the market, you know, we're at highs for quite a while with no volume, okay? That's pure distribution. What was sticking out like a sore thumb was the October 2014 level. You know, the S&Ps, you got to remember, stayed at highs from December of 2014, going all the way over to August of 2015. Okay, so a year and a half really didn't move. But what was sticking out was this October high volume swing low. So on the S&Ps, that was 1874. When we came down on the 24th of August, we hit 1867. Now, what has happened since then? Well, what has happened since then, folks, is that what's sticking out now is the October 2011 area, and equities have already hit them. You know, if you remember, when we were looking at that October 2014 area, the S&Ps stayed at the highs, but one by one, equities started hitting their lows of October 2014. The transports were the first ones to actually do it on an indice basis. Well, bottom line is that is basically sticking out like a sore thumb now. It'll take a bit to get down there because it's so far down. Bottom line, though, get your stops in. Keep your stops in. You're getting plenty of time to get out of these markets or put stops in. And you better do it, because what is also happening is that the correlation inside the marketplace, specifically meaning that the market's going down and metals are going up and the dollar can't handle higher price, is saying to me that there's going to be, it's not that there's another jolt in the marketplace, but what it is saying is that currencies, fiat currencies, flat out, are going to buy less. Now, what would that mean? Well, what it would mean specifically is that inflation is coming in or already in the marketplace, not deflation. Okay, and it doesn't mean the end of the world. All it means is that when you have the metal that's stronger than even the stronger currencies, it is saying that we get inflation that's kicked in here. So, you know, we'll see how the inflation is definitely in food. There's no doubt about that. What we also have is this, as I brought this up this morning, is that if I show you this oil chart, I want to show you something here. The oil market, year-over-year basis, you got to remember something, that the core rate has to do with year-over-year basis. Right now, we're running 1.8. So when you take oil and we bring it back, well, guess what? The year-over-year basis, okay, you know, last year, you know, well, let's see, let me get you an exact. Last year, within another few months, we're going to be year-over-year. With another few months, we're going to be year-over-year at $45, $50 oil. So it's going to be easy for the core rate to go up because of the fact that it's already got smoked. You stay right there, folks. We'll be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We're 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Live in faith that the whole world is on your side so long as you are true to the best in you. Market-wise, guys, let's take a look at it out here. Dow Industrial's down 78, Nasdaq off 18, S&Ps are down 9.5. Gold contract up $20.60, trading at $1,152 an ounce. Gold, wide price spread, accelerated volume, takes its swing out with volume, folks. Gold's on its way to 1165, which was the high in July. Silver, up 32 cents, $15.11. Platinum up $22 at $9.54 an ounce. Copper, flat at $2.30 a pound. Light sweet crude up 66 cents, trading at $45.14 a barrel. Bonds, 10-year, up 3 ticks, 128.02. Wide price spread, had the volume, didn't hold the price. But what that means, folks, is going to go right back topside once again. The bond market is going after, the 10-year went into its highs from April. It's going after that. We'll see whether it's going to take it out. 30-year up 27 ticks, 156.15. Also had the price spread, held price better. Bottom line, that also is going after its highs. That has about another 8 points in order to get into those highs. King dollar. King dollar can't handle higher price. Down 86 ticks at 96.12. What King dollar has done, folks, is this. King dollar has failed to get to its swing point the last 4 separate times it tried to get up there. You came down today with volume. Euro up 35, trading at 112, and the yen is at 120.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We take a look at the SPY. This is what you have happening in the SPY. This is a trip. Bottom line is you had high volatility out here today in spades. Market came back quite a bit, by the way. Not enough, though. Not enough for a Thursday in a week that, of course, only has 5 trading days. You got under the swing point from Wednesday. That swing is a 192.56. We hit 190.56. We've done 152 million shares. Now, the ABC had to do 153 million. So we're shot on that. Bottom line, what I expect you're going to see out here, you're going to be right hammering down here once again tomorrow. And I'll explain why. Well, we had the expansion in volume. That is the first part. That's not the larger part, though. Inside the NDX 100, what do we have inside the NDX 100? Same type of setup. We had 35 million shares. NDX 100 made a nice run back. Okay, we're a low of 102.27. We're at 103.84. We did 35 million shares. NDX is stronger than the SPYs. NDX also, I suspect, will get into the lows of today once again. Gold contract. What do we have with gold? You got it all. Wide price spread, accelerated volume. Takes a B point out of an ABC structure on the way up with a vengeance, folks. Gold does 197,000 contracts. It took out the price point of 1141.50 with volume. It's on its way to 1169.80, which was the high that was generated out here on August 24th. What's really cool, though, is this, folks. What gold has done is this. You know, gold's been going down since, 2011, right? We hit a low out here in July of 1073. It's based since 1073. You had your first sign of strength, 2 or 3 of them off the lows in July. You had the wide price spread, accelerated volume, and then what you had, which is really absolutely important, is a pullback with dramatically lighter volume, rejecting lower price, and we had 2 of them. You had the first run got you up to 1169. You pull back into 1117. You go up slightly higher again. Then you do the full pullback with lighter volume into how you came off the bottoms on August 11th and 12th. You go topside once again, meaning we went from August 9th up to the 18th with volume. You back down again with lighter volume. Now you're taking everything out with volume and price. What that sets up is not just the highs of 1169. That sets up a run to 1234, which is the May 18th high. The reason it does set that up is that when we came off the bottom, you came off the bottom with velocity, and you broke the downtrend from the May area. That's what you did, and you broke it with conviction. Then what did you do? You went back and tested the top side of the trend line that you actually broke, which is pretty cool, okay? So that's the run that's set up right now. The intriguing part about it, if you're in that market, is that this is the first time in 11 years that gold has gone the separate way of the S&P. If you take a look at some of these equities, an Eagle just rips apart its swing point with volume. Eagle is up 264. The swing point was 25.49, had 4.4 million, did 6.5 million. Same deal with an Eagle. I expect you're going to get 27.01. It's going to be making its way up to the $34 area. Bonds. Bonds are the market that continue to give the most consistent information out. And what that is that bonds want higher price. They want to go after their highs. We did 1.2 million contracts today in the 10-year. You're coming into the high. Now, bonds got to a price point of 128.15. The low of the high is 128.05. The high is 129.10. We're going to be right back up there, folks. It's going to go right after those numbers, which is going to be just pretty wild watching this whole thing shake out. You know, if you do have an interest in getting any coins, you know, I had our man, Mr. Chris Gaffney, on, who's the president of Everbank World Markets a couple days ago. Everbank has a very nice deal on gold coins. They're called the Five Blessings. They're made by the Royal Canadian Mint. They have the exclusive distributorship on them. If you're looking for a safe way to buy coins, folks, this would be it. They're selling gold coins $75 over spot for gold 1-ounce pieces. They're selling silver $7 over spot. You can call them at 855-750-4051. That's 855-750-4051. Now, as to where we're going in the marketplace, folks, check it out. Nikkei blows out its bottoms last night with juice. Nikkei went down 495. You're at 17,571. Guess what? That's going a lower price. DAX in Germany closed at its lows, folks. We're at 9,427. That baby's going to blow out its lows tomorrow. I expect we're going to be going after lower price tomorrow. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 78. NASDAQ off 18. S&P's down 9. And as we do each and every Thursday at 20 past the second hour, we have our man, Mr. Basil Chapman. And don't forget, folks, Basil has an outstanding show here every trading day, 11 to 12 Eastern Standard Time. Get it right on your cell phone, TFNN.mobi. He has a great newsletter also. It's the opening call, the way you can test drive it right now. 1 month absolutely free. Go to our website at TFNN. Go to newsletters, trading newsletters. You see the opening call right there. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. Happy holiday, man.
Thank you very much. And what fantastic weather we've had here in Boston.
How cool is that? That's awesome.
It's just beautiful. And you know what? This is almost the end of September. Usually it's pretty cool at this time. So
yeah, that's good news. That's good news, man. So what are we going to look at today, Basil?
As usual, we'll look at the start off with the Dow. And what I've been showing my subscribers to my opening call is that I'd drawn this in some time ago, that the lowercase, it looks like the pattern looks like a lowercase h that then goes to a lowercase m. So two little arches. And then there could be a bigger one as that M pattern continues. And look at this. We've been in a Dow trading range between 16,000 and somewhere around 16,600. There was one big spike that went to that 16,933. Remember when the Fed came out with the news, there was a spike up and then a sharp close down. And this is a very interesting pattern. Why? Because there are a couple of technical signs that I have. One of them is a particular indicator I've developed, which suggested that today there should be some kind of a rally in the futures that then triggers a rally in the cash indices. So we saw that. That worked very well. Actually, talking about the show, my Tiger technician's out. Let me just show you something. It was during the show right here. This is the chart. I hope this is the chart. Yeah, the 5-minute chart.
I heard you say there should be a bounce. I was listening. Good man. Totally.
Right. I said at 1900, I said it must be an upturn right here as the technicals are improving. And that's what we try to do on the show. I mean, it's a really important time period. It was 11 o'clock to 12, and we got a rally from 1900 to the high of, what was the high? Today was 1936. Yeah, 1936. So that was a nice, more than a bounce. Actually, that was a very important rally. Let me go back to this chart and I'll explain why. One of the things that I've been looking at is that when you go into a rectangle formation, it doesn't matter whether you're trading the futures, it doesn't matter whether you're trading a stock, you're short or you're long. If you're looking at this boundary that really contains the price, it's fascinating how as you get to the border that says it should break down, which is where most people would like to start shorting if it's breaking down, that's where there's a reflex action that goes back up. And as soon as you go to the upper level, in this case, it's really the 16,600, low 16,700, that's where there's been the pullback. So today was such an important session. Why? Because my contention has been, you remember I was speaking about 17,500 for a long time. I said the moment we break that, we're in a new trading range.
Yes.
So now we're in this new trading range. The other thing is that the 15,370 low in the Dow and in many of the indices and stocks, they had a spike, a very sharp spike to the downside, which was not, it looked like it was triggered by bad news, but we know bad news. That really wasn't bad news. It was, I think it was minor news, actually. And it was an electronic trading system that really pushed the price down. So my contention has been that was artificial, and that the real thing is how are we going to come out of this arch formation. If we start trading 2 out of 3 sessions with a close below 16,000 in the Dow, I think all the indices become vulnerable. On the short term, I think there could now be a little bit of a bounce. I got one of my indicators saying there should be a rally. It doesn't mean to say that you need to go plus. It just says that from a certain low in the market, there should be 7 to 9 points in the E-mini futures that trigger a rally in the S&P. But what's really important about this, I'm going to go to another chart. You and I have been talking about the IBB, the biotechs, for quite some time as being vulnerable. And we've seen that they've dropped very sharply. I was 400, they've been down to 284, and they, as far as I'm concerned, they can have counter-trend rallies, but I think they're going to be making lower lows and lower highs for a good while to come. But the other index that we were looking at, the sector, is the S&P Select Healthcare Spider Fund. And that's been on a tear for 2-3 years. And all of a sudden, it bumps into this 77.40 high, followed the next month by 77.27. It's a technique I use. I call it a Chapman Wave 2-bar reversal. And we get this candle that I call the Chapman Wave Roman candle. And this says that the sector that has been absolutely on fire for this long, if you look at the weekly chart, you can see
couldn't get out of its way, right?
It's starting to deteriorate. Now it's a very important platform that's holding here. And we'll see, we actually, for my subscribers, we have been short a number of times. We're actually short now. So the real key is it's at 68.76. If it starts to trade under 67 in the 66s, that skinny candle doesn't have very much support. So I'm looking at it and I'm saying one by one, we've seen very important sectors start to deteriorate. This is a dangerous market at this particular point, but you can always get, I don't think it's crash material. I think it's just lower lows and lower highs for a while to come. And in between, we're going to get these very sharp spikes. We could have one at any time now because the VIX index is really starting to show that, the VIX. See, even with today's very sharp sell-off, where the Dow went so close to the September 1 low, but didn't take it out, the VIX index did not take out the high of the 22nd of 26.29. So watching it real closely. So we have some long positions, we have short positions, and I think I'm quite comfortable with that position for subscribers. It's going to be a very interesting week coming up. This one was very important. We'll see the follow-through coming up in the next week. Going into October is going to be very, October, of course, September, October, difficult months. But
we'll tomorrow morning is going to be interesting, man. I mean, that the DAX, closed its lows and the Nikkei blew it out. You know what my take is. So
that's right. And what's interesting?
And it's going to be really cool. And you're right in the neighborhood. So the market, folks, is hoping that Janet Yellen saves the market tonight, and she's going to be speaking in 35 minutes, right where Basil is at UMass in Boston, I believe. Right?
Oh, really?
Yeah.
Okay.
That's the take. Yeah, man.
Oh, that's very interesting. That whole area, you must see that area. It's completely changed. I mean, Boston has changed a lot. Anyway, it's going to be very important. I don't know, what can the Fed do? I think they stuck right now.
Listen, once the markets get blown apart, which they have, no one can do anything. The Chinese are the best at that. They just kill people if you go short. So, and they can't even help their own market.
And you know what's very interesting? The FXI, if you look at that, and that's one of the Chinese markets.
Yes.
After they said that there's no shorting allowed, the market still went down. Now, how do you figure that out? If you aren't allowed, all you can do is sell. You can't short. So
well, it's great you brought that up, because what happened, folks, that's the exact same thing. If you remember what happened in 2008,
you remember that's right.
The SEC came out and said, "Hey, you cannot short banks anymore." Well, guess what?
Correct.
I remember the next day so well. Banks went down so fast the next day, it was unbelievable, because
Absolutely
everyone that owned them sold them. So
Yeah, that's right. Actually, it's a worse thing, because now you haven't got the balance of shorting and buying.
Yeah,
it's not a good thing.
No,
well,
what Basil just said is really important, folks, because anyone that's been short this market, let's just picture out this week, traders are if you're short buyers, you're shorting it and you're buying dips. And you're just doing it again because, that's the name of the game when you get volatility.
Correct.
You're short bias, but guess what? You love those bounces too, man. So you can get more shot on every bounce.
Absolutely right.
Basil, you have a great one, a safe one, and we look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Absolutely. Stay right there, folks. We'll come right back. Dow finished down 76, NASDAQ off 16, S&P's down 9. We're going to be right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 78, NASDAQ off 18, S&P's down 7, and Nike, telling you, man, Nike's going to take over the world, folks. Pretty amazing. So Nike closed at 114. It's trading up $8, 122.44, and the highs on Nike, let's see, 117. So she's blowing away her highs right now. Here, watch these numbers. These numbers are phenomenal. Okay, the estimate was $1.19. They made $1.34. Their future orders, ex-currency, are up 17%. 17. Can you imagine growing a company at 17%? Their margins are 47.5%. Man, that's intense. Okay, so let me just see this for a second. It's amazing, you know, what that company has done, folks. I mean, just over the course of years. But bottom line is that, okay, so this is what they're doing right now. So check this out. This is amazing. They're taking in $8 billion every 90 days. $8 billion with a B. Bottom line is that that's going to a new high. That's the bullish case out here. BBBY. Let's go take a look at Bed Bath & Beyond. Bed Bath & Beyond closed at $59.33. That's trading at $57.84. And this is, let's see. They had problems this morning. They were recalling some stuff this morning. Their sales, net sales, they expected $3.03 billion. They did $3 billion. Their comp sales are No, they expected their comp sales to be up 2.3%. They're only up 0.7%. Their earnings per share, they made their earnings per share. Now, when you take a look at Bed Bath & Beyond, this is going to be a big problem with Bed Bath & Beyond, and this is why. It's blowing away its lowest swing point, and Bed Bath & Beyond has been on a downtrend anyway. I mean, we're 59 at the close. That was down from 77, which was the highs. Now Bed Bath & Beyond is going after the high volume swing low at 54. If you want to see a high volume swing low and how equities just love to go after it, let me put this up here for you. And if we have a high volume swing low from June of 2014. Now, the thing that's really wild about this is that when you have a high volume swing low, this went to 54 and then did a counter trend bounce up to 79. That's amazing, right? But bottom line, it did it. And guess what? Right back down the other side again. I suspect what we're going to see here is that, yeah, well, we'll find out when we're down there. This is real easy because as you get down into that lower price, if you're pounding it again with volume, you very well could break that whole area out. Then you get into a price point of $47. Pier 1. Pier 1 basically is taking it on the chin once again. Pier 1 closed at a price point of $8.67. You know, this is a company that almost went BK inside the 2007, 8, 9 depression out here. And numbers, it's trading at the 771 right now. Numbers go like this in Pier 1. Earnings per share was 4 cents. Their comp sales are 2.5%. They expected 4.5. That was kind of pushing it. Their sales, they had an estimate of 434 million. They only made 430. So they've missed all their metrics. This is also blowing out bottoms right now. And this is where, there we go. This is where it turns into large problems because this actually already had blown out its August 24th low. So this baby here is heading for, you got to be kidding me. Yeah, it's heading for 598. Let's go to Brent in Martinez, California. Hey, Brent, what's going on, brother?
Hey, Tom, how are you?
Doing great, man. You having a good day?
I am, thank you. How about you?
Yes, sir. Cool.
I just had a quick comment. I'm not sure how you pulled it off. You're obviously a fairly persuasive guy to get Larry to be on every day of the week or 5 days a week.
Man, he is such a trooper. You know, and folks, man, Mr. John Logan, he had his appendix out. He had I was bursting on the way to Philippines, and thank God he's all right. He's going to come back on Monday, but our man, Mr. Larry Pesavento, has been doing 2 hours in the morning, and it's been awesome. Yeah, I know, man. It's so cool. He's so great. It's amazing.
Oh, he's a great. I love him. He's a great guy. He just has so much experience and knowledge and
big time
everything to bring to the table. It's a pleasure having him on there.
It is. It is, no doubt.
I was just going to quickly. I wanted to talk to you about GLD, but I had a real quick little thing I wanted to tell you about. You know how I do the quicker, the weekly.
The options, yes, right.
Yeah, on the GLD.
Right.
I bought some on Tuesday, just kind of thinking.
Good for you.
Yeah. So I was looking at that B2C. It looked like it was completing on, that we'd be setting up a, AB till CD, and so I took a shot at it. And the funny part is I lost my nerve a little bit, and I got out. I did good. I sold them. I doubled my money, but then I look at them today, and I went ahead and I just bought myself more time. Is what I really was wanting to do.
Nice.
So I'm not out of the trade, but I bought into some out to November.
Oh, that's going to be nice, man. Because this GLD right now, so what you have with the GLD, folks, just like the gold contracts, an ABC up, and the way that this is set up, though, is that we could blow away to 112. It's one of those deals that it's set up just right. You have one ABC with juice. You'd hit the 112.12, build cause for another 2 or 3 days, maybe a week and a half, and then that 117 is game. Because it's one of those situations that everyone is bearish enough in the market They've thrown gold, down for a long period of time. And guess what? The market is screaming that inflation's out here. For some reason, the fiat currencies, folks, are getting killed, and the metals are not getting killed. And that's the first time that's happened in 12 years. So we'll see where it shakes out. But my take on that is that we do have inflation. When I look at food, just food alone, and I had brought up the aspect of because oil had come down so dramatically. Within 2 months, folks, by the time we get into November, December, what you're going to see is that the oil market, you got to remember something, the core rate is 1.8, okay? And you can argue that, hey, listen, man, the core rate doesn't mean a thing. Well, it does. Because over a long period of time, that's energy, that's food, and that's shelter. And so what ends up happening, shelter has gone up, food definitely has gone up, and energy has gone down. Well, what happens is that when you look at the aspect that year over year, what we're going to be basing this off, when December comes, we're going to be basing it off $54 oil. So guess what? That oil is not going to help the core rate come down. Could stay the same, but it's not going to help it come down. So. We'll see where it shakes out, but it looks to me that we got some action here, man. Cooking, brother?
Oh, yeah. All right, Tom.
Have a great one, man. Have a safe one. Dow finished down at 78, NASDAQ off 18, S&P's off 9, gold up $21, silver up 33 cents, and King Dollar just can't hack it, folks. King Dollar is the best of fiat currencies, but guess what? That doesn't mean a thing, because it's all a perception of what something is worth and what we get in return, folks. You stay right there. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go to our man, Dave in Clearwater. What's going on, brother? Dave, you there?
Hey, Tom, how we doing?
I'm doing great, man. How you doing?
I am doing well as well. How are you?
I like it. I like it. You got a little action here today.
I'm telling you, man. Before we go into it real quick, if you don't mind, going back to your other caller for a second, Larry Pesavento, that guy's a total gentleman. He's a total gentleman. He's a walking encyclopedia of trading knowledge, and I've had the opportunity to speak to him, just on the phone several times, and the guy just amazing. But
he is. He absolutely
is. Anyways, tell me something, Tom. What's your take on talk to me on natural gas? Man, what's your take on it?
Well, last time you called, to me it was at ABC down to 250. We hit 2592 today. So it's like, okay, now I'm trying to figure out, we got a high volume spike. It's like, okay, man, let me just look at this. Because, that's spike.
You looking on the Z contract or the V contract?
The X contract.
You're looking on the X, okay.
Yeah. So I'd probably be a buyer at 2.632.
Yep.
I'll show you what I like here. So when I take, what happened, folks, is this, is that in the futures today, I mean, the volatility is just, when you hear folks who say the volatility is great, what it means is that it's tradable, okay? And I know if you're an investor, volatility stinks, okay? But if you're a trader, what happens is that you need it because you need price movement in order to make money.
Right.
So what happens here is that, you had the spike down this morning, and that was on the injection, and the injection was huge. Now, that's really cool because the injection was huge, and yet it overtook all the highs. Now, when I look at this, what I love to do, Dave, I just take this low here of like 250, and then I take the high of 260, and I'm saying to myself, man, okay, that means we got 290 in the game here, right? So it's like, okay, man, depending on how it pulls back into where that started, I can't picture it getting lower than that. But it's a high volume spike still, but I'd like to see it get into 2.634, and then if we get a rejection, I'd trade it.
Well, that's the thing. I don't know if you're looking intraday because I don't have the.
No, that's what I had up. That's where I'm getting. Okay. That's where I'm getting at is intraday, right?
Yeah, exactly. Well, brother, you got to trade intraday. Natural gas intraday.
Right.
It's crazy to do it otherwise.
Right.
Because it's so volatile, you're going to be making money. Next thing you know, you're not making money.
Right.
And I mean, going like the blink of an eye. But that 10:30, I don't know if you're looking hourly or half hour, but that 10:30 bar has got to get tested.
Right.
Because it just hit it. I was watching, and I flipped over to a 5-minute bar just because it's so entertaining to watch. I mean, that thing spiked down. You'll blow through 78,000 contracts in 5 minutes, easy enough.
It did. It did 10,100 contracts.
Yeah, in the blink of an eye. And the majority of that volume, Tom, if you put it on like on a 1 minute, the majority of that's within 2 minutes, 2 to 3 minutes.
Well, it makes sense. All the stops are there, right? I mean, that's
exactly. And you never know. It can spike up, spike down. But the thing is that I would advise to you is because I trade natural gas like it's my job.
Right.
Is that when you do that, you have to be in and out before the next report comes out on the following Thursday, because right now, Tom, it's way oversold. I totally agree with you. In that respect, and I fully expect that 10:30 bar to get tested overnight or first thing in the morning, get rejected, and then it's going to go topside. But from a fundamental standpoint, if you look at the bill rates at the Henry Hub, for example, it was up 466 billion cubic feet compared to a year ago for a net total of 3.44 trillion. That's a 13% increase. They're filling that hub faster than they're drawing down.
Okay.
And I've noticed as the prices come down, the fill rates are spiking up, which says to me the shale producers are getting more efficient because they're continuing to pump gas even at a lower price. So long-term wise, at least for a little while to come, it's going to be sell the rallies, man. That's the best I can tell.
No, listen, man, I was looking at this, and even at the oil market here, let's go look at oil for a second, because what happened with oil, folks, yesterday is that oil comes barreling down with juice, okay? And it's like, you see, it has it today. we broke the, we went to 43.71. We broke the 99 and we broke with volume. So it's like, hey, man, oil can back into 39.74. Now, what that would be, folks, oil came off. That could just be a test of that with lighter volume. But thus far, it has volume. So I was looking at this yesterday, Dave, and then I've been watching the natural gas like a hawk, man, because I know you're out there, and I like trading it. I haven't traded it because I'm all over the NASDAQ, and you know how this goes. When you jump on something, folks, you jump on it for long periods of time. But anyway, that oil contract, when I'm seeing that go that low, I'm saying to myself, you know what, man? Energy's cheap, man.
Yes, it is.
That's what seems to be happening out here. So
yes, it is. I don't know if you caught the Wall Street Journal's article about 2 months ago. They had CEO, I think it's Continental Resources, one of the more prolific shale producers.
Yeah.
And with the draw, what's happening, at least what this guy's saying, and it backs up in the price point, is that as the prices come down, the service companies, the Halliburtons, the Schlumbergers that service these wells, their prices are coming down. So he's saying basically that the consensus among shale producers is that they can break even at 50, make money at 60. So if they're doing that, and what's happening also is the technology is getting better. They're getting better at pulling oil out with lower costs. What they're doing right now, at least according to what I read, which, take with a grain of salt, but it factors into what we're seeing in the price movement, is that a lot of these companies, they're drilling wells, they're capping them, and they're waiting for a bounce. And the moment there's a bounce, boom, they go back very quickly, set out the well, drill oil, and fill the supply point up a Cushing, and they're monitoring it.
And do it again. It's like a trade. It's awesome. I mean,
exactly. That's what I'm saying, man. Exactly.
Totally. So picture this, folks. What Dave is explaining, this is what's so cool, okay? Because, you put together the technicals, but you got to understand the fundamentals, too. You just do, okay? And it's so cool understanding that, because for us, for a longer-term basis, it's like, oh, man, that's pictures, folks. You got a backyard. You have the tub in the backyard, and the tub's filled with oil, okay? Oil pops up, bang, you're ready to get it out. You get it out, you kick back, you go to the Bahamas again, you groove again. You're not going to be able to stay at the Bahamas year-round for 10 years like you could have at oil at 100. But guess what? You can go 3 times a year, groove, and come back, and you get your little bathtub in there and throw some more oil out, man.
and the other thing, too, sorry if I'm taking on too much time, but the other thing, too, is the United States has more resources than anybody realizes.
Oh, totally.
The Marcellus Shale Formation, which starts in Ohio, I believe, and runs kind of like a crescent moon all the way through West Virginia, Pennsylvania, and into New York. I don't know if you caught the EIA's report about a year ago. This is what I'm about to say to you. This isn't a geological survey. These are proven reserves.
Right.
Okay? Proven reserves, Tom. Key word here, proven.
Okay.
There's 250 quadrillion cubic feet of natural gas in the Marcellus Shale. And that's not even counting
what the heck is even quadrillion? That's four trillion.
Trillion. It's 1,000 trillion. So it's 100,000 million, if I'm doing the math, or a million, I should say. Sorry. It's a million, right? Just in the Marcellus Shale. This is not including the gas that's in the Bakken Shale, that's in the Permian Basin, that's in the Eagle Ford, out in the Gulf. Just the Marcellus Shale alone at current consumption rate in the United States is enough natural gas to power us up for the next 500 years. There is so much energy in this country.
How cool is that, right?
Cheap energy is going to be sticking around.
Cooking, brother.
Thanks, Tom.
Thanks for the call, man. Thanks for the education. Appreciate it, man. You got to love that, folks. That is so cool. You stay right there, folks. We'll come right back. Dow finished down 78. NASDAQ off 18. S&P's off 8. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks, and don't forget our man, Mr. Andy Hecht, is going to be coming up next. You can, if you're listening in your car right now, folks, remember that you can get all the programming at TFNN right on your cell phone. TFNN.mobi. You just heard our man Brad, out in California, from Martinez. Dave from Clearwater. We kick off a morning show. It's an outstanding morning show. Normally, our man, Mr. John Logan, is on at 8. Larry's on at 9. Larry has been on all week. For John's coming back Monday morning. We have some great programming. Right after Larry, our man, Mr. Basil Chapman, comes up. Then we have Darryl Martin, Steve Rhodes, Dave White, myself, and then, of course, after me, on Tuesdays and Thursdays, we've got our man, Mr. Andy Hecht. And if you do enjoy the programming, folks, please tell 3 people. That'll be just absolutely awesome. When I do an update also, folks, at 10 o'clock in the morning, that is approximately a 4-minute update on what I'm looking at in the marketplace. Now, you can get that update if you happen to be right on Facebook. So just go to TFNN on Facebook. That update is out there each and every day if you just want to get a rundown of what I'm thinking in the marketplace as the markets opened. Now, overseas. So our markets came back real nice, actually. Okay, if we go from the Dow from the bottoms to the tops, the low out here today was 16,016. Well, we're at 16,201. So you come back over 200 points, by approximately 200. That's a nice uptrend, no doubt, right? Well, it's not an uptrend, but you came back. If we take a look at the S&Ps, what you did with the S&Ps is this. The S&Ps, the low today in the S&Ps was 1897. You closed at 1919, okay? Now, that being said, folks, this is what you have. We go over the Nikkei. Nikkei closed, blowing out its lows from the 25th. Bottom line, what that's telling me is that the Nikkei is going to open tonight, go at a lower price, throw a jamming in the marketplaces. That jamming in the marketplaces will what? Will go right from Asia right over to Europe. And Europe today, what you had, Europe, the DAX closed down 184 bucks. Had some juice behind the move. We did 156 million shares. Not that's a lot, but that's an expansion. Yesterday was only 116. You're coming into 294. You closed right at the lows. The low of the 24th is 93.38. We got down to 93.62, and you closed at 94.27. This thing's going to go after that low tomorrow. You know, we'll see whether it takes it out or not. I expect you're going to. Why? Because what happens is this. When you have a week that is down across the world, it's real hard to basically just even come back on a Friday. That in itself, never mind the technical setup, that in itself is really hard to do. Can it do it? Sure it can. The probability of that is not huge. That's only the first part. The second part is a larger part. And what the second part is this. And this is how deviant the market are. The markets today, right, did 1 billion shares in the NYSE. 1 billion. So you know what the market did, folks? The market confirmed an ABC structure on the way down. The 1 billion took out 962 million when you taking a look at the ABC structure. I had talking about this yesterday. Bottom line, tried to get to a higher high, couldn't handle it. Well, we blew that away today, and we did it with volume on the NYSE. We go over to the NASDAQ composite, and what you have with the composite did 1.993 billion versus 2,042. So the composite was a little short. Bottom line, folks, it's subtle, it's deviant. That's what markets are all about. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up next. You'll be growling a problem with them. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, man. It's a beautiful thing. Thanks for being here, folks. Go get 'em.